for opening prayer? A volunteer? Can we get a volunteer for opening prayer, or should I nominate? Okay, please. Amen.
Precious Father, this opportunity to together to commit this whole learning experience into your hands. Pray for our facilitators, as well as participants. Pray that every one of us is inspired with your wisdom. You take control of the class and help us to make this a beneficial experience. In Jesus' name.
Amen. Thank you very much. Thank you. So we're going to start quickly with what we have for today. Today, thankfully, we don't have any opening session, so we're going to go quickly to our first session for today. Our goal is to ensure that we leave here at 4:30, so at least we can get to before we start. So our topic for this morning is understanding the cybersecurity issues inherent in cryptocurrency and other digital assets to provision of the VAT and VAT. So this morning, a very good favorite of us from last yesterday will also be speaking to us. We are going to be having two people speak to this topic. CBN has also confirmed that they want to also be able to speak at this session. So we're going to take the first two presentations. If we're able to slot them in with the time, where we would speak to them, to their paper, and before we go for lunch, because our lunch is set for 1 p.m. So for this morning, before we go on, let us remember that we have to put our phone on silent. It's very important that we put our phone on silent because, like I said, we noted yesterday, everybody, wherever you're sitting, there is a microphone near you. So whatever you say is being magnified for our participants online to hear you. Please, we are very far away at the back. I don't know whether we can come forward a bit, please, so that we can fill up this space. It's not as if we are doing any social distancing there. We are just plugged up. Please, can we? People, please, can we? Please, yeah. Thank you very much. These people on the last row, please, can we just fill up if you're not in there, please? Thank you very much. So, Mr. Kombe is already online. Hello, Mr. Kombe, can you hear me? Mr. Kombe, from yesterday, we have seen that he's a very good subject matter expert with a lot of experience in this area of cryptocurrency and the digital currency. And today, he will still be speaking to us. If you want his profile, you may want to look at page 9 of your brochure. You may want to look at page 9 of your brochure. But before he starts the presentation, please let us remember to wear our tag or to have our tag with us. Remember that we're going to get every presentation that is going to be made here today. And if you want to be sure that you're getting all of them, you can also register online with the link so that you're sure that your email address is correctly written and there will be no accident in ensuring that the material that are delivered to you. So with a warm round of applause, let us welcome Mr. Kombe Kaponda.
Thank you, moderator, for that great introduction, and good morning, everyone. It's nice to be here again. I'm looking forward to more exchange of knowledge today. We build on what we built yesterday and see if we can cement some of those concepts. So to get started, today we'll talk about the understanding cybersecurity issues that are inherent with virtual assets, and then how does supervision and regulation come into these virtual assets and virtual asset service providers? So the introductions have already been done. I'll go straight into the presentation. In terms of the disclaimer, remember I'm still a central banker, so all the views that are expressed in this presentation are the author, and they do not necessarily represent the position of the Central Bank of Zambia, its executive board, management, or its policies, but all the materials are referenced, cited official peer-reviewed publications and articles. That's about the presenter. I think it's already in the brochure. In terms of the presentation outline, so we'll do a brief recap of what we talked about in day 1, and then obviously go through the basic concepts which we need to rehash. We're talking about virtual assets. It's a form of money, so we'll talk about the evolution of money. We'll talk about the underlying technologies in terms of blockchain. Then we'll zero in the cybersecurity issues around these virtual assets and cryptocurrencies. And then we talk about the collaboration we need when supervising these issues. And then I'll give you my final thoughts. We'll open it up for a discussion. So I'll jump straight into it. And in terms of the introduction, let's just do a couple of recap of what we discussed yesterday. So obviously, you know, we talk about global financial crisis, 2008. We saw financial regulations, some regulation failed, and from there, regulators around the globe came out with strict regulation in terms of recommendations, in terms of supervisions, in terms of oversight, in terms of monitoring some of these financial solutions. But ultimately, yesterday we discussed that 96% of the world's money is in digital form. Only 4% of it is physical currency. That's according to research by The Economist. And then coupled with that, so all these financial transactions, the digital financial services, the mobile financial services are all using 96%. And that's why us as supervisors, as regulators, as investigators, we have to focus on that 96% and learn the technologies. That's why we're discussing the blockchain technologies. Yesterday, Adebayo did a brilliant job just to break it down. And then for us, we have to learn these technologies so that we can effectively investigate, effectively supervise, effectively provide oversight, because you can't investigate what you don't know. So we have to understand these technologies and understand how value moves traversing on these digital technologies. So cryptocurrency is a form of digital asset. We have to understand how that works. Remember, it's a digital world, so the regulation, the supervision, the oversight for today is solely focused on these financial technologies, which are the 96%. We have to understand the technologies, we have to build skills. That's what we're doing today. We have to train, and we have to build relations, because for us to get to the bottom of this, you know, we have to collaborate with other interagency partners. We have to collaborate with agencies across the borders. Because remember, these are virtual assets. They traverse on public internet, so they move from one region to another. So a border is not a jurisdiction, and that's why we have to build these relations with other law enforcement across the borders. Continuing with the background, we say we understand what fiat currency is. It's government issued, backed by a commodity or reserve. And obviously, remember what we said yesterday. Even with the old forms of money, the key issue is there has to be that trust. Remember, we mentioned that sometimes they would scratch on the coin or gold coin or bite it to make sure it's authentic. That's to make sure, you know, it's trusted. So even with digital platforms, we have to build that trust. How do we build the trust? Is to make sure these applications and platforms are resilient, and then that's why now we have to protect them from any cyber attacks. And we've seen from the initiatives from the central bank, the Bank for International Settlement is saying almost 80% of central banks are doing some kind of work. We are happy enough that Nigeria has launched the e-Naira, and in definition, we said a central bank digital currency is a digital form of programmable currency, which is digital, but ultimately it's legal tender created and backed by the central bank. So meaning if you use that digital currency, it has to be accepted generally in that jurisdiction because it's backed by a central bank. And that's what we discovered. We talked about the good properties of the e-Naira. We talked about generally the properties of a digital central bank digital currency, but ultimately we established that it's a liability of the central bank and the claim from the central bank. We went through a little bit of history of money, where we talked about the barter system, the gold trade, the coins, the paper money from the Chinese on the 600 DCs. And later 770 DCs. We talked about the debit cards and the credit cards. We talked about electronic money. We talked about mobile money. We talked about crypto assets. And I think we referred to the famous white paper from Satoshi Nakamoto in 2008, which started all of these sort of virtual currencies. So if you go to bitcoin.org now, you will find that original paper, and it stipulates how the blockchain works. We also talked about the new technology giants and initiatives by now Meta, previously called Facebook, where in 2019, they came up with a white paper also, and they proposed a digital currency called Libra. They've since rebranded that Libra into Dime. But after that launch of the white paper, regulators all across the world, in developed nations, in the US and the UK, some on Facebook to explain how this digital currency worked. But what central banks realized from that is that, if that Libra or Dime digital currency was launched, Facebook was already boasting of 2.7 billion people, and they already owned Facebook. So the proposal was they wanted to make sure value can be sent as easy as sending a text message or on WhatsApp. What does that mean for jurisdictions? What does that mean for monetary sovereignty for these central banks? And that's why we've seen there's a lot of initiative to come up with a central bank digital currency. But ultimately, every jurisdiction will be different, because this central bank digital currency will have to use the local motivations from the country where it's being launched. For Nigeria, we saw it's the issue of financial inclusion, it's the issue of international remittance, it's the issue of allowing remittances from the diaspora. Each region will have different use cases. The more developed nation, for them, it's the issue of just going digital all the way. So the use cases will be different, but in terms of the design, we discussed that the designs have to be interoperable. And I think we cited the classic case of Africa, where if we want to make these central bank digital currencies interoperable, we have to make sure there's a vertical interoperability and horizontal interoperability. We have to make sure they are compatible with CBDCs in different countries, so that there is international trade. And then ultimately, we can use those digital currencies and mitigate some of these risks that are posed by cryptocurrencies. We talked about the storage in terms of the cold wallets, the hard wallets. We talked about the most important thing, which is the private key, and we said whoever owns that private key owns the cryptocurrency. We shared some examples of how these private keys are stored on storage devices, on media, on mobile phones. So for the investigators, if you're on the crime scene and it involves virtual currencies, chances are you have to preserve that evidence, put it away, label it. If you have to get expertise from other agencies to do forensics, we discussed that those collaborations are important. Ultimately, we have to make sure that trusted medium of exchange, a unit of account, is preserved, so that if we go to the courts of law and we have to present evidence, that platform or that evidence has to be preserved, so that you can come up with a conviction and ultimately close the case successfully. We talked about peer-to-peer networking, where there's a proof of work, proof of stake now. We talked about the different variants of cryptocurrencies because of the different properties, different settlement time, different security parameters being presented. For the original ones, they focused on the proof of work like Bitcoin, where they were preventing double spending. This double spending is there in that white paper on bitcoin.org. When you get a chance, you can download it. It's not very bulky. You can put it on your weekends read and just get an appreciation of where all these cryptocurrencies started from. But we've also seen technologies such as distributed ledgers, which the Nigerian e-Naira is based on. A distributed ledger is simply a ledger, but the ledgers we used to use back in the days, where you have a huge book, you have rows and columns, and you put your figures there. Just that now it's electronic and you've decentralized it. Instead of it hosted in one place, it's hosted in different other places. And in those different other places, when the transaction happens, before it can be committed to the blockchain, other nodes have to verify and make sure that transaction is legit. Once that transaction is legit and is committed to the blockchain and becomes non-immutable. And those are the properties of the blockchain which most technologies adopt today. Financial services industry has adopted the blockchain. Other industries have adopted the blockchain. They're using the blockchain in digital identity. Blockchain is now being used in land titling. Blockchain is used for tracking authenticity of precious metals, diamonds, authenticity of art, paintings. The Mona Lisa can be put on the blockchain and make sure it's an authentic Mona Lisa, and you don't have those counterfeits and fakes. So we discussed that, private key is important and has to be kept secretly. And we said whoever owns that private key owns that crypto. Adebayo mentioned cases in the past where people lost the private key, meaning they don't have access to those crypto those crypto assets. The case for Nigeria, I think we deliberated it in the Q&A, but I think in summary, it's compliant with the Bank for International Settlements, where they meet the 3 pillars of a central bank digital currencies, not doing any harm, coexisting in that it has to be interoperable, and obviously it's an innovation and brings about efficiency. In this innovation, we're hoping it can be programmable, where other APIs can be interfaced. I remember Adebayo was talking about programmers coming up and coming up with modules which can enhance the central bank digital currency. Tax collection can be infused in there. It can be used for other cross-border remittances, diaspora remittances. But ultimately, you know, in other jurisdictions, it also has to cut down on the cost of cash, because cash is expensive. To print cash, you need money. To enhance the security features on the physical banknotes, you have to put in security measures. It's expensive. Once that currency comes in from the printers to the central bank, you have to distribute it to different commercial banks. You have to use armored vehicle. You have to use security to escort that, and all that cost. Even when the banknotes become so spoiled and become soiled, you have to take them out of circulation. There are machines that are used in the central bank to do that. You have to incinerate them, brick them, and destroy them so that you don't have any counterfeit notes. So all that process, on average, is about 21% of a central bank budget. So a central bank digital currency can take away that cost and can be repurposed. But we also mentioned the issue of the risks. With all these 96% of electronic transaction, there's a lot of risks of anti-money laundering and combating financial terrorism, the cyber security risk, which we'll concentrate on today, the operational risk, because you want that trust in that payment systems platform, and you want it to work right all the time. If I send value from here on say even a mobile platform, I dial *221# and hit send, I expect that transaction to commit and has to settle on the other end, and the other person gets it. That's what builds the trust in these electronic platforms. That we hope even the design of central bank digital currencies have to bring in this trust, so that we don't have operational risks, and it has to work correctly all the time. Cybersecurity is with us. Example, when Nigeria just launched on the 25th, just the following day we had cybersecurity threats, and the Central Bank of Nigeria issued a warranty of fake naira already circulating on social media. So the cybersecurity risk is very real, and it's very easy to come about. So that's why user education is important. We have to make sure we build basic skills as we use these financial technologies. But ultimately, we all agreed that the initial design is solid, it's inclusive, it's innovative, there's some efficiency in there, there's resilience built, and it's proudly Nigerian. It's the first central bank digital currency in Africa. It's the second globally after the Sand Dollar from the Bahamas. Moving along, we said even when these technologies come on board, supervisors and service providers and monitors and central banks and financial securities have to agree on certain formats where they all come together, and even when they're coming up with policy, they speak the same language, starting from the technology regulator, technology agencies. Because remember, these financial technologies will traverse on technology platforms, on mobile platforms, on cybersecurity platforms. So the regulation and the policies have to be agreed upon. Financial services regulators, technology regulators. Then you have to look at the cybersecurity laws of the country. You have to look at the data protection laws, the data privacy laws, and obviously, if you'll be going international, you have to look at the international laws like the GDPR, the General Data Protection Rule in the European Union. That applies for everybody. So you have to, all these parties have to come to the table and agree on the best way to issue policies. Central banks, the Ministry of Finance, financial conduct authorities, the technology regulators, the financial intelligence units, and ultimately there's a consumer who has to move value from one place to another. We have to protect that consumer. So the consumer protection comes in. We mentioned technology and telco agencies and all of them. So they have to look at the credentials. They have to look at the market conduct. They have to look at the assets and protection. They have to look at the competition. They have to deal with issues of anti-money laundering and combating financial terrorism for them to come up with a resilient payment system platform. So it has to be a combined effort. and all responsible agencies have to chip in and agree on policies and the best way to implement some of these platforms. Why do we regulate these? Why do we supervise? Why do we need oversight, especially for virtual assets? Most of them traverse on the dark web. They use onion routers. So there's illicit activities that take place underground because, you know, like we will see earlier, we'll see later, the transactions on the internet today, only a handful are on what's called the surface web. Underneath is what's called the deep web and the dark web. That's where most of these transactions happen. You find that there's illicit activities, there's ransomware attacks, there's new forms of terrorism, and that's because there's that anonymity, especially for the most common cryptocurrency, which is Bitcoin. Once you get that private key, nobody knows who owns that private key. So people take advantage of that, go on the dark web, and they try to transact in all these illicit activities. And that's why we have to learn about how these work and see how best we can mitigate. But we mentioned yesterday that there's a lot of price volatility. So as a mode of investment, you know, you have to take the risk. But ultimately, we said, you know, you have to be careful when you invest in some of these things. You can't put all your life savings there because, you know, you don't know when the price will fluctuate, and you don't want to lose your pension once you invest in these platforms. In terms of supervision and monitoring of the virtual assets and virtual asset service providers, we know the virtual asset is the asset itself, the asset we are dealing with. The virtual asset service provider is the service that provides that. If it's an example of a Bitcoin, you have a Bitcoin which you use in your private wallet, but your virtual asset service provider will be like a Bitcoin exchange. That's where now, remember we said, where fiat currency beats cryptocurrency. If you want to convert your Bitcoin into your fiat currency, you have to go to an exchange. And we're saying as regulators, as monetary authorities, that's where we have to regulate, because there we have to register that entity. And we say this exchange, this virtual asset service provider has to provide proper electronic KYC, which is know your customer, and people onboarding there have to register with a known identity, so that if there's a case or if the transaction goes wrong, we can still go back and verify and try to correct. That way we protect the consumer. But if it's peer-to-peer and it's on crypto, we have no visibility there. If there's a transaction that doesn't go right, or people are scammed, it's very difficult to go to a monetary authority and complain, because those are not registered entities. And we're saying for us to come up with all these supervision or oversight policies, we have to make sure we are inclusive. We have to make sure there's stability on the systems. We have to make sure there's integrity. We have to protect the consumer because they're the most important entity. And then we have to take care of the technology risks. We have to take care of the cyber risks. We have to look at what data protection policies are in the land, and we have to make sure there's proportionality. In terms of collaboration, we have to, adhere to global organizations that are providing these guidelines. We mentioned global organizations like the Basel Committee on Banking Supervision. We mentioned the Committee on Payments and Market Infrastructure. We mentioned the Financial Action Task Force, International Association of Depositors. We mentioned the International Association for Insurance, because insurance now ties in with all these things. We mentioned the International Organization of Securities and Commission. So all these organizations give guidelines, but all these guidelines are combined. So we have to make sure, even when we're coming up with policy or procedures, we refer to some of these international guidelines, because that way now we are compliant and we can interoperate with other cross-border agencies that are trying to do the same. Remember, we said even if we're coming up with a central bank digital currency, we have to make sure it has to have some kind of interface, the horizontal and vertical interoperability we talked about. If we all adhere to international standards, chances are the two different payment systems will somehow talk to each other, and that way we can be able to move value from South Africa in Cape Town to Cairo in Egypt, because the standards are similar. Remember, we mentioned the power plug, where regardless of where you are in the world, if you've got an electronic device or if you've got a phone and you need to charge it, the plugs are standard. We need such standards even in financial services, so that even if you go to Nigeria, at least you plug in and you get your power charged. It doesn't really matter what's behind there. The consumer is not involved with what's behind the payment system. All they want is, if it's a payment systems platform, there's a plug-in, they can plug in and they can be able to transact as normal. The background is what the regulators and technology providers have to sort out. Ultimately, that integration has to be there. Remember, there was talk about integration on technologies like email. It doesn't really matter which platform you're using. If you're sending an email from a Gmail account, if you're sending an email from a Yahoo account, from an Exchange account, from Office 365 account, it's still an email. What happened when you hit send doesn't really matter, but it has to give us that interoperability. Payment systems have to be like that. It doesn't really matter what's in the background, and in terms of standards, we have to make sure of that. Okay, so that was a recap of what we talked about yesterday. Now let's zero in on cybersecurity. And I'll start with the very beginnings of where cybersecurity started. I think the most documented cases were in the 1970s when cybersecurity began with as a research project. A man named Bob Thomas realized that it was possible for a computer program to move across the network, leaving a small trail of where it went. And he created a program just to test that. He named the program the Creeper and designed it to travel between different terminals on the ARPANET. The ARPANET is just where it was a research project where the internet started. And all he did was he wanted it to print a message called, "I am the Creeper. Catch me if you can." And they programmed that. And that went viral. And those traces it was leaving, that's where all the other technology of viruses, of worms, they picked on the same concept. So it started as a project, and some malicious people picked it up. But in terms of evolution of cybersecurity, we've seen it now evolve from the 1990s, where we had the first generation type of viruses and attacks, which were standalone, where you have a virus on a flash disk. I don't know if you guys remember the floppy disks, the 3.5 floppy disks, where you put it in the drive and you find that it's infected. Computers were not networked then, so you find that the virus infects that computer. We could deal with that because all you do is, back up the data, format the hard drive, and reinstall it, and you're back in business. Now we have interconnected networks, interconnected because of the internet, because of the local area networks, because of wide area networks. So once a virus or a malicious code attacks a network, it spreads easily. And we've seen that from the second generation of attacks in the 1990s. Now attacks came on the internet. In the 2000s, exploitation of vulnerabilities on most of these operating systems, like on Windows, there would be a patch that would lack. If you don't patch your system, you're vulnerable. And we've seen the WannaCry viruses. Fourth generation, we saw a rise in targeted and unknown malicious code. In this modern day now, we're seeing phishing, targeted attacks at CEOs, and it's taken another route. Now we're talking about the fifth generation type of viruses and malicious code, which are large scale. We've seen now viruses attacking an oil pipeline. We saw that in the US, and viruses can bring a system down. And if it's critical infrastructure like a pipeline, it causes a disaster. And that's why we have to be careful and work towards mitigating this cybersecurity risk. In terms of technological evolution, we've seen technology increase. We've seen from when the internet started, we've seen social media. In terms of technology, nobody sends letters anymore. Postal boxes are gone. There's no fax. Email killed all of those. Same with the newspaper. You find print newspaper sometimes, but most of it went television. Television, now you find everything in social media. If there's a press conference being done now, and somebody is streaming live on a social media network, you get it there and then. You don't need to wait for the news and 19 hours to pick it. So information is instant. It's the same with currency, from the fiat currency to the cards, to crypto, to virtual assets. And now with the change in technology from the internet, from the social media, from e-commerce, we've seen digital media. Most of the things are cloud now. We've seen infrastructure change. Now we're talking about big data. We're talking about data warehouses. Most of these technology giants like Google have massive data on some of us. They can do analytics and come up with artificial intelligence and predict what we're going to do next. That's all thanks to data. We've seen Internet of Things, where now you have even household appliances like a refrigerator going on the internet. we've seen smart watches, we've seen artificial intelligence and robotics. So with all this innovation and devolution and the connectedness, even cyber attacks become more prevalent because it's easy now to just have that trail of attacks, and it will go to the targeted platform, but it will destroy on the way, and that is critical. And that's why we have to be mindful of these cyber threats. In this modern day, we have a variance of now cyber threats, starting from spear phishing, where you have a targeted attack. We have zero-day exploit, where if a system is new and there's no patch, you can exploit that. There's man-in-the-middle attack. Remember what we said yesterday when we are sending a message and we want to encrypt it. We write the message on a piece of paper. We encrypt it, lock it with a private key. As we pass it along, there's that man in the middle who attack it. They will attack it, open it, and try to sniff what's out there. If the encryption is not strong enough, that data is lost, or they can alter the message, and then there's no non-repudiation there. So we've seen advanced persistence threats, we've seen malwares, there's denial of service attacks, ransomware, where data is encrypted and they'll claim ransomware. You pay them, most of the time they won't give you the data back. There's denial of services attack, there's structured query language injections, there's phishing attacks. So there's a whole web of these cybersecurity attacks. And as long as we are connected on the internet, these threats are there. So the cybersecurity threat is real. But like I mentioned earlier, if you look at the composition of the internet now, the surface web we use today, where we go and see news, we go and see our email, we go and see, we go and do a search, that's only 4% of what's on the internet. The other 96% is the deep web and the dark web. On the deep web, that's where now you find all these financial records, medical records, you find the legal documents there, you find academic information, you find government records. And once these deep web are hacked, this is when we find out now, information is compromised. But where still is the dark web? The dark web is where it's anonymous, and I think that's where now people exploit technologies like the blockchain technology or the Bitcoin, where it's anonymous. You only have the private key. You don't know who's behind that. So you can order to have, trafficking of drugs. You can buy arms. You can traffic in human beings, because those are routers that are on the dark web. So everything is encrypted. You won't see what's there. And this also, the dark web started as a project. There was a US project in the Department of Homeland Security where, they just wanted to encrypt messages, but ultimately it became commercial and people took advantage of it. So this is still there. So ultimately you can see that we only, the day-to-day usage of the internet, where we do normal things, is only 4%. The rest is 96%, and that's huge, because now you have all these cyber attacks prevalent on this 96%. And remember, we also mentioned that 96% of all financial transactions are digital. So it means this space is wide. Cyber risks are with us all the time. And whatever we do, we have to make sure we create awareness. And even before we click on anything, we have to think a little bit twice. It's unfortunate we don't do that. But ultimately, the concept has to be, we have to borrow from traditional ways of defense. And the concept is called defense in depth, where you have different layers of security. Even when a bad person breaches the first layer, they still have the second layer to deal with, third layer and fourth layer. And that's why you hear people preaching about multi-factor authentication, where you have to use different types of authentication. You can use a PIN, and you can confirm via the phone, or you can use a thumbprint, or you can use a retina. So the more defense mechanisms you have, the highly unlikely that these bad guys on the cyber attack will give up. They will target those that are weaker. And I think the concept of traditional protection of kingdoms in the olden days illustrates that very well. If you've seen old movies, you see that a castle is protected. You find there's a huge perimeter wall, which you have soldiers on top sitting there. The door can only open when you authenticate. We've seen it in most of these movies, and that used to happen. Those are different layers of authority. Even the concept of firewall was picked from traditional ways of security. This is a simulation of internet intrusion detection. You have to make sure at least if there's something coming, you see it. If somebody is unknown, you have to authenticate it. This is a simulation of once you're authenticated, you use a virtual private network to traverse in. But ultimately, you can see the layers of security. This is the ultimate, the internet. You have intrusion detection. You have virtual machines running. You have visibility on the attack surface. In the old movies, you'd find that you have people hiding in the bush just looking out for people who are coming. If people are coming, these would do surveillance and tell the people on site that people are coming. So this is a concept that security is using now. It's total security in depth. And I think we've seen modern security borrowing from the traditional way of security. In terms of threat intelligence, you have to be intelligent enough to know where your threats are coming from. There's zero tolerance to security. You don't want to admit anything. You have internet protocol security. You have encrypted data. You have deep packet inspection, where before data comes in, it's inspected. You have SIEMs, which are security information events management. But I think defense in depth pretty much picks concepts from the back way back when kingdoms were protected. So in terms of the next generation of cybersecurity solutions, they're huge, and I think for every organization you have to look at what you can pick from this depth and implement. But ultimately, you want different layers of security. And remember, we are only as secure as the weakest link. If it's a wide area network or private area network, if there's a cyber breach on one end, chances are that we are all interconnected, and that vulnerability will go around and attack probably the whole network. So that's why awareness training is important. Everybody in the organization have to know what they need to do, what they don't need to do. They need to know they don't need to plug in the flash drive. They need to know that there has to be the antivirus has to be running, the anti-malware has to be running. If there's two-factor authentication or multi-factor authentication deployed, they have to follow that religiously so at least they're protected. So the defense in depth continues, where you protect the perimeter, you protect the network, you protect the host, you protect the application, and you protect the data. So there are different layers of security, but with security in depth, cost comes in. So you have to do a cost benefit analysis and make sure you have multiple areas of protection, but ultimately, you have to look at your budgets as well. So like we said, there's different layers of security. There's extended protection and responses. You can do privileged access management. You can do database activity monitoring, whatever is happening on the database, any commitments, you monitor that. You have security, artificial intelligence, which is monitoring. You have the new generation firewalls on the edge, on the perimeter. You have automated security awareness and simulation, human firewalls. You can do simulation of phishing attack, where you send a phishing attack to an organization which is simulated, and you see how many people respond to that and click that link. If the number is too high, then you educate the users to make sure you're more secure. But ultimately, you want zero trust network access controls for an enterprise or a network to be secure. We've talked about misuse of these virtual assets because of the anonymity on the dark web, and people take advantage of this. This is where you find the hacking, ransomware. But we have to mitigate that with coming up with different layers of security, and ultimately we have to have some kind of intelligence where we can predict where these attacks are coming from. That's threat intelligence. You have to have some automated penetration testing just to test if your systems are resilient enough. You have to know that the exposure analysis is taken care of. But all in all, have some kind of prediction where you can predict some of these cyber security attacks. You have to prevent them. Prevent them in as you come up with a policy-based encryption. You isolate the systems. You segregate the networks, and then obviously you detect them. If there's an infection, you detect it as quickly as possible. You prioritize the risk, artificial intelligence threat hunting, and then you respond. If there's an attack, you have to find a way of response. Response can be in form of a business continuity management, where you have a remote site. If for some strange reason the main site is it's on its knees and it's attacked, you might as well, move to a secondary site and continue providing a value, and business continuity is very important. If it's financial services, remember we talked about that trust. So once a financial service is attacked, you don't want your end customer, your consumer to suffer. Might as well move to business continuity side and continue providing them the service, because they have to trust that service. They have to make sure once they use that 2G phone of theirs and dial *123#, that value has to move, because the grandmother at the other end is waiting for that money to pay fertilizers, to pay other things. So it has to be guaranteed that value has to move. So in terms of response, we have to have business continuity plans in place and make sure systems come up as fast as possible. You have to have your recovery times and say, okay, if we have an attack in the next 1 hour, we need to come up and still provide value to our customers, because they trust that system and they need to continue trusting financial services. In terms of the virtual asset risks, they've grown, and I think we've seen in the news a lot of attacks. Just recently in South Africa, 2 brothers vanished because they kept the private keys of that crypto exchange. There was a case of cryptocurrency where the CEO in Canada died abruptly, and apparently he was the only one with the private keys to all the crypto assets. That case is still being investigated. The most common one is the Mt. Gox, where it went down with a lot of crypto assets. So the space is volatile, and we have to be mindful of that. But like we said, it's risk management frameworks where we identify these risks, we measure and assess the risks, we manage the risks, report them, and find a way of mitigating them. And obviously, we have to be aware of all the risks. We have to be compliant to make sure we are resilient. And obviously, if we've got regulatory frameworks and other legal frameworks, to abide by those, so that we make sure we mitigate most of these risks. Same with technology risks. We have to be aware of what risks we have in technology. We have to be aware of the risks we have on our software, the bugs, the patches. On the hardware, we know you have to have standardization with vendors. We've already talked about firewalls and virtual private networks. And obviously, the physical security also has to be enhanced. You don't want somebody just coming in and exploiting your network. So all those have to be taken into consideration. But I think at this point, I want us to look at the video. It's about just 7 minutes, and just have an appreciation of all this coming together. And I think I'll request the secretariat to play that video. I will stop sharing my screen. After that video is played, then I'll come back and conclude. Secretariat, over to you. I'll stop sharing my screen now. On my end, I don't have any audio. I'm not sure for other online So thank you, Secretariat, for that video. And like was said, when the deal is too good, you have to pretty much think twice. Do I have an option to share again, or just I think? Okay, let me share my last slide. So, like the video says, if the offer is sometimes too good, you have to think twice, because it's not every day that you make 200% profit on an investment. Chances are that there's something wrong with that. My final thoughts. We've seen that research shows that 96% of the internet is a deep web and the dark web, and 96% of the world's money exists in digital form. We have technology giants now more than ever, owning more information than governments. Data is now, the new oil. With the refinement of their data, technology giants have become the most wealthy organizations in the world. Data is becoming a human right, and ultimately that fuels the digital transactions, and hence the reason we need more oversight, we need close monitoring, we need supervision, and we need watertight regulation to regulate these virtual assets and virtual asset service provider. Because ultimately we want to provide platforms that are secure, that will allow instant, fast, and real-time move of value from one place to another. You want those transactions to be traceable for anti-money laundering and combating financial terrorism. You want the platforms to be convenient, to be trusted always by these consumers, which we have to protect. And in this 21st century, we have to manage the technology risks. Technology is here, we have to manage the risks and harness all the advantages of these virtual currencies, cryptocurrencies, but ultimately mitigate the underlying risks. For the forensics teams, we have to follow the money. The digital platforms are there. We have to learn how value moves. We have to find a way of decoding, but ultimately we have to conform with these international standards. The guidelines from the Financial Action Task Force and all the other international organizations we mentioned. But remember, whoever owns that private key owns the crypto. So to follow the money, you have to have an idea of how those private keys looks like, and then probably find a way of tracing it. But we have to understand the technology. We have to continue learning like we're doing it now. We have to build skills. We have to build relationships and collaboration, because these transactions are cross-border, and you might need assistance from people from across the border. That's why the networking of these international conferences is very important. But all in all, do not lose your pension. Do not lose your life savings. Be secure. You have to look for safety, security for your financial stability. Thank you very much. Those are my references. Thank you.
Thank you for giving us the hard facts as they are, because really this is really another sobering. I don't know who feels the way I felt, but just had a huge sigh. It's worrisome, really, what we see out there with cybersecurity, with us having our money. There are certain things you hear, you now rationalize certain steps that are being taken when the government tells you, when dealing with crypto, be cautious. SEC will come, be cautious. Another person will come, be cautious. But really, are we going to just be hearing be cautious, and we're not able to have something that actually makes it safe for us to enter that field? Because really, if you're not planning, tell us exactly what you're doing and how you're going to make that space safe for us so that we can use it. So to discuss this presentation this morning, we have Professor David C. Blake. He is also a part of the AGA Africa family. So he will be discussing this. He's the General Counsel for the AGA Africa. And of course, he's an expert in this tech space. And you can read more about him on page 7 of your brochure. His profile is on page 7. So by the time you read it, you will understand that indeed he's a subject matter expert in this space. So he'll be discussing this paper with Mr. Kombe. Hi, David, can you hear me? I think you are muted. I can't hear you. Are you muted? I can hear you.
How about that?
I can hear you. Welcome, David.
Is that better?
How are you doing?
I'm
What time
great.
is it? What time
How's
is it?
everybody?
We're very good.
It's 4 a.m. Or actually, it's 5 a.m. now.
Okay, so sorry. You have to join us by 5 a.m. Thank you so much, David, for making the sacrifice to join us. So you may now speak. You can see what Kombe has presented to us. It's quite scary. You know, we want to hear your thoughts on all he has said.
Yep. So a couple of things just to start is first off is I'd love to keep Kombe in the room or up on the screen if he's capable and willing so that we can continue the debate. And I actually want to start out with how many people in the room have a crypto wallet, just by a raise of hands.
Please, can you raise your hand? We have quite a number here. We have
5, 10?
We have more than 5.
Okay. How many of those number, and it's a little tough to see on the screen, how many of you have access to the blockchain through an app as opposed to a crypto exchange?
And then we have 3, 4, 5 heads, all of them free.
Right, so a lot less.
No, about the same number.
You're accessing the okay. Can one of those folks describe to me how they did it? I mean, how did you get to the blockchain directly without using one of the virtual asset service provider exchanges, like Coinbase or FTX or?
Anybody explain how were you able to get access without going through any of the blockchain?
Platform.
How were you able to get access?
You access the blockchain or info platform.
Can you hear him? Please maybe
Barely.
Can you come to this? Because there's a microphone in this case.
So ideally, there's a blockchain or info platform where you can log in with your seed to access your account. You don't have to go through Coinbase or any other platform.
Did you have that?
Okay, so you did use Coinbase.
No, blockchain info.
You use blockchain info.
So is that I don't know that one. Is that just a one of the apps that somebody out there on the web created and you downloaded on your phone? And you did that because you don't have to pay the fees at Coinbase?
No, it's not. It's just a platform like, I think it was initially there before the Coinbase and others sprang forth. So it's normally just have to get your ID from them. Although they've realized though, but it's been like, they've been there for like forever, way before Coinbase.
And what'd you invest in? Which coin? If you're willing to share. I mean, it's
Bitcoin and BNB.
So thanks for engaging with me, and I'm trying to get a sense of things. Yesterday's discussion I thought was great and actually much more in depth. That is, the knowledge base in the room was better than lots of rooms that I talked to about crypto. And when it comes to this particular subject, which is twofold, I think. One, cybersecurity when it comes to crypto assets, and then secondly, supervision. Those I'm going to try and break those things out for the group. So when it comes to cybersecurity for crypto and virtual assets, while I love Kombe's presentation, a lot of what he's talking about to me is not necessarily cybersecurity issues around cryptocurrency or the blockchain. Those things are, I think, properly put into the risk category or to classic scams that we've all seen for years. I mean, pump and dump is not a term that was created post 2008 when Bitcoin came on the market. Pump and dump scams have been around forever. This is just a new way to practice that scam. And I don't think it's any more scary or nefarious, or even from a law enforcement and regulatory concept, any more challenging to tackle. It's different, and it's mostly different because people don't understand the tech. And so a primary message that I have when I speak is, don't be scared of that. Don't be scared of the tech. The bad guys that are out there abusing these systems, which is, I think, a better word perhaps in this context, are simply taking advantage of a newfangled thing, and that increases their profit margins because fewer people are going to be educated consumers of crypto on the front end, which means it's a target-rich environment for a scammer, especially when you talk about these profit returns that get reported in the press. And two, law enforcement isn't as capable in coming after you for two primary reasons. The first being, in many ways, it's an unregulated ecosystem. And secondly, they don't understand it. They don't understand it. They don't have the tech people. They don't have the brain power. They don't have the computers to really do a robust investigation akin to what we do when it's cash, or what we do when it's traditional money exchanges or traditional money laundering using government banked or government banks endorsed by government fiat value dollars. So a lot of what we're talking about, I mean, I think for the most part, and I welcome the room to challenge this, and indeed, I don't get up at 4 a.m. to click through PowerPoints and speak at you. I want to learn and get the value out of this exchange with you, so I hope you will engage with me. But I actually find this tech, blockchain tech and cyber currencies, to be quite sound when it comes to a cybersecurity perspective. I mean, even thinking about how you get there, with the fellow that I was just talking to, he's got a wallet. He got his wallet, I think, off of a largely unregulated app. He's got his private key. The private key is what gets him the access to the value in the Bitcoin that he has. If I can phish him and get his private key, those Bitcoins become my Bitcoins. Now, we can see that on the blockchain, and from a law enforcement perspective, we can begin to trace it. But if he's coming through a lesser app that is an unregulated exchange and interacting directly on the blockchain, then the regulatory ability to help him as a consumer is much, much less. That leads into a second important concept here, apart from abuse, which is risk. And risk doesn't just come in the way that most people default in the cryptocurrency world of risk, that is the volatility of any particular coin. I see the risk here as very much buyer beware. And look, if you want to, as that gentleman said, go directly to the blockchain and interact there in your exchanges, then you're engaged in a more risky transaction. If you go to one of the established virtual asset service providers, the exchanges, and I often use Coinbase just because it's the one I'm most familiar with, your risk of getting the value you want, whether it's in Bitcoin or Litecoin or Ethereum or something else, is diminished. It's a safer way to transact in this value chain. And a big reason for that is because government has regulated that exchange. Coinbase is a registered entity in the United States. It adheres to all of the traditional obligations of licensure. It engages in quite healthy, and in my personal opinion, know your customer information. That is, when you create a wallet on Coinbase, to then use Coinbase as your interface with the blockchain that supports any of these cryptocurrencies, you're using Coinbase, that company, as your interface. That is no different than me taking my dollar bill here, turning it over to Merrill Lynch or some other big Wall Street trader, and letting them go trade in IBM or Tesla on my behalf as my agent on the stock exchange. The only difference is the stock exchange is largely managed by Wall Street, and it's managed through public disclosures and corporate accountability and all these other things. And the blockchain and the value that it presents in the form of the different cryptocurrencies and blockchain ideas is not. It is not banked by governments. It's not banked by some big Wall Street. It is largely endorsed, banked, and credited by the participants in the blockchain. And there's a lot of value for that because there's a lot of people doing it. There's a lot of people watching. So that transparency, that immutability of the blockchain becomes the thing that creates value when it comes to Bitcoin and some of these other concepts. The next thing I would say is there's a huge downside to having that diffuse system as your support, as your girder, right, as your foundation. If all of this is binary code, and it is, and all of it has to be processed, and you're thinking about all of the transactions that are occurring, all of those transactions, while public and transparent, just become a lot of stuff. And so you need immense computing power and or very complicated software to interact with all of that data. I mean, the data that is being created every day because of blockchains and the blockchain transactions is mind-bogglingly large. No individual, you, me, all of us together would have a huge challenge in actually understanding, tracking, and verifying that information. It's a very quick talking point from the pro-crypto advocates that it's transparent and immutable, and I think that's true. It's also entirely subject to power. Literal power, turning the lights on. If all the power went out tomorrow in your power grid, all your crypto's gone. There's no way to verify it. The blockchain's dead. It only lives in ones and zeros somewhere supported by a power plant. And it comes along with understanding this immense amount of information through very complex computing processes backed by huge amounts of computing power. So that interface is not a simple one. There's nothing easy about that. There's no easy way to access that particular benefit of the blockchain. That is, in my words, it's very clumsy. It is a tree that's growing with an infinitesimally number of branches, all of which have to, and for you to be successful in the blockchain, you have to understand how each branch relates to each other branch all the time, in real time, even as the branch is growing exponentially. That makes the blockchain kind of messy and difficult to understand, and again creates these barriers to entry of sophisticated players getting into the market and playing with people who are simply trying to take advantage of the technology and abuse it. And that's what gives rise to all these opportunity scams and the ICOs and the pump and dumps and all the things that that Kombe had identified. Those are kind of my opening remarks, and to boil them down before I hope to be able to get into a back and forth is the tech is, while big, not really all that new. And so a lot of the concepts that you're dealing with as a regulator are tried and true methods from the past can be applied successfully in this world if you have the tech. If you have the tech background and tech foundations, you can interact with all of these things quite well. And so my message is, don't be scared of any of this stuff because it's confusing on its face, and there's a lot of new terms and a lot of acronyms, and that's just a new commodity market coming online. It's creative. Creativity is good. The market's going to be there. It's going to be a very successful business model for lots and lots of people, and there will be lots and lots of people that absolutely lose their shirts because they've simply chosen poorly to invest in something they didn't understand, didn't do the time and due diligence, or to Kombe's point, it was too good to be true, which it almost always is. There's just nothing free here. My second point to start the dialogue is regulating virtual assets and regulating virtual asset service providers are very different regulatory efforts, and they, I think, are motivated by very different governmental policy grounds. You don't so much want to regulate the virtual assets, that is the individual players in a peer-to-peer exchange, because at this point, and it may be forever, that is an individual risk that those people are taking and taking it knowingly. The role of government is not to protect everybody in all ways from doing something bad. I'm a big fan of, you're allowed to be stupid as an individual. If you make a stupid choice, there are consequences to it, but I'm not there as a government regulator to stop you from making a poor choice. What I am or should be doing is creating the opportunity for somebody who wants to engage in this market to do it safely. And therefore, I'm going after, I'm regulating service providers, the exchanges, to ensure that when somebody abuses their system, they have the information that empowers me as a prosecutor to go find them and prosecute that person. They're giving the information when somebody enters the market. They're giving them all the volatility risks, and so people can be informed when they engage in this market. And I want to be able to create the know your customer type information, because as long as that is associated with a wallet, then I can peel that layer and have a more sophisticated understanding of the blockchain without inhibiting the peer-to-peer blockchain, the efficiency of what blockchain technology has brought. So I, again, want to get back with having said those things, some of which are, somewhat controversial, I think, but I'm happy to defend them. And based on the discussions yesterday, I don't think we have many. We have a lot of people who do understand this that want to ask questions and/or have a dialogue. So I'd hope, Abeli, that there are folks there who will raise their hands and ask a question. And I'd love it if Kombe came back on, because I suspect he disagrees in some part with some of the things that I've said.
Yes, I think we'll start with that. Please, if you have a comment or question to what he has said, please can write it down and pass it across to me. But I would invite Mr. Kombe to please come online now. Hello, Kombe.
Thank you. I'm back online now.
Okay, your video is not showing. So I don't know whether you can make a comment to decision taken by David.
Yeah, I think, yeah, David, those are brilliant and great insights. I think key to that is that, the technology has always been there. I think the concept is still the same. It's just a technology layer on top. And I think once you get comfortable with the technologies now, everything else, I think, pans out. So the issue, even for me, is we even as regulators, even as service providers, we have to dive in. I think gone are the days when regulators shun out and just want to ban some of these technologies outrightly. But I think it's to learn the underlying technologies that facilitate these, understand how the blockchain works, the basic principles, so that even when we are trying to come up with policy, if we're trying to come up with supervisory or regulatory, or we understand what we are dealing with. And I think that's the biggest issue. Once we move.
We can't hear you. That's from us.
Key is just to understand the underlying technologies first, and then coupled with that, we move on and see how best we can regulate, we can do oversight, we can do supervision. For the law enforcement agencies also, you can't investigate what you don't know. So you have to understand these technologies. When you are trying to investigate how value moves from one place to another, you have to have an idea of what a private key is. You have to have an idea of what a regulated exchange is, an unregulated exchange is, then bring all that together. But for me, key is also collaboration. As an agency or as a law enforcement agency, we can't know anything. If you need assistance with an expert in forensics, you have to co-opt them in and get those expertise for you to get a solid handle on the case. If you have to prosecute it and to court, you have to make sure all the evidence gathered is preserved, and that way you can have a watertight case, prosecute it, and close the case to conclusion. My submission.
Yeah, except that you take the pump and dump scams that you were talking about. Those are just classic fraud. There's nothing else to it. You have individuals who conspired to create what we now call or know as an ICO, because for whatever reason they've created or named a coin. The recent thing in the press is the Squid Game. Well, the Squid Game, currency, or really is a blockchain concept. There was nothing to it. There was no value behind it that was marketed. It was gimmicky. It was pop culture relevant. That gave it a lot of numbers or headlines. 2 or 3 people created, and then maintained the keys to it. It got promoted. People invested in it, and then they lost their shirts. Well, I could do the same thing on a web page, which is technology that we all understand today, and say, I'm coming out with a new Squid Game, or a better Squid Game, or a Squid Game with people in purple jumpsuits as opposed to blue. And if people assign value for whatever reason to that, I can sell it to them, and then I can turn my website off and go away. And so my point is, it's not the cryptocurrency and it's not blockchain that creates the opportunity for bad people to abuse the tech. And the way you would investigate that tech, the way you would regulate that tech, all those things are in my opinion, kind of tried and true means. It is a policy question for folks in Nigeria or in lots of the African countries today, where this is being hotly debated, about whether or not you want to regulate this, or whether or not it is a buyer beware opportunity where government stays out of individual transactions and lets the technology flourish. As you talked about yesterday, there are great benefits and opportunities, incredibly efficient ones, for peer-to-peer value exchanges to occur without an intermediary in, in T fields, in all kinds of ways, just by using a phone, which is now, this technology is easy to get and rather cheap. For me to exchange value with you instantly, verifiably, is really a special thing and can be global changing to economies. That doesn't mean people won't abuse it, but when you're investing as opposed to exchanging a value source at fairly low denominations, that's a very different risk profile. And the question is, should government even be regulating that in the first place? Is it government's role? Is it the government of Nigeria's role to create a regulatory scheme, try and license and oversee every single person that has a good idea out there in the world from your jurisdiction with the limited resources, tech resources, money resources, people resources that you have there, to regulate against the good idea, maybe from somebody in your country, to defeat the potential scam? Or is it educate people that there's a lot of scams in this world and there will be for a long time, and if you choose to engage in it this way, you might get had? Or there's safer ways to engage in it, which is through a regulated exchange approved by the government, who follows know your customer processes, and all the same processes in trading securities, which include background checks and moral turpitude checks and all of these. So again, my point to the room, because in many ways the folks in the room I think are thinkers and leaders, and going to be in this world tomorrow or be the regulators, and you and I come from a regulatory background, so that bias exists for both of us. Hey, you know what? It's kind of okay. It's not okay that people lose $2.3 million. It's not okay that people took advantage of other people. The question is, did they understand the risk that might happen? And if they did, well, that's risk. And it's not good, it's not a great outcome, but is it government's role to step in and try and fix it? I don't know if that's right. I don't know if it's time yet for that. I actually don't think that it is necessarily. You're like everything else out there that's mushrooming from in the information age, you're gonna lose some of these. I agree 100% that you should not be investing your pension in crypto technology these days. But it isn't, the returns for those that are successful are so attractive. It's that line drawing exercise. I think government's role is that line drawing exercise of where is Wild West or just unregulated economic opportunity okay, and where is where is this industry progressed to a point that government should be certifying its or giving validity to it? And when somebody abuses this side of the ledger, does government enact? Can you file your consumer complaint and have government bring its resources, its tech, its personal, its brain power to bear to right that wrong? I think there are still very legitimate reasons for both of those things to exist in the world. And at least as far as I know, and I could be wrong, Nigeria's kind of drawn that line such that, yeah, if you engage in crypto, it's not legal, but there's also no recourse for you. You are on your own. And it seems to me that the law and the policy puts people appropriately on notice to do that. They might get rich, probably not, right?
Yeah, I think that's well put, Prof. And I think for like we heard yesterday from Isomia, where she was saying, in terms of regulation, the Nigerian jurisdiction has not banned cryptocurrencies, but they have given cautionary statements. And obviously, if you look at analytics on channel analysis, you see there's a lot of peer-to-peer transactions going on in that jurisdiction. And people, you hope, know the risks ultimately because there's no recourse. And it still comes back to the point saying, you have to at least do a little bit of learning and know how viable these platforms are. Because if they're not regulated and you use some of it and the transaction goes south, you still can't go back to the financial services regulator, financial conduct authority to claim that you lost that money. So ultimately, it still comes back to just user education. As long as the masses have an understanding of this, and if you have to take it on as an investment vehicle, you have to weigh all the risks and know what you're going into. What we've seen mostly in other jurisdictions is if some of these technologies are so great and regulators think they can adopt some properties from there, you set up a sandbox. A sandbox is just a test bed where it's a safe space to test some of these technologies and see if there's any value addition to the whole financial services ecosystem. And if that's viable, test it for a period of time with a watered down consumer base. And if there's any traction there and you see that they can work, you can probably then take them to the mainstream financial services and provide the necessary regulation, the licensing, and then you provide oversight. But ultimately, you don't want to stifle innovation because financial technologies are here to stay. And even if supervisors and regulators don't regulate them, that's happening. So if those properties are good enough, we test them in a safe environment. If we need to take them to mainstream financial services and get on to that, then we enhance all those good technologies, but ultimately we can come up with guidelines, with oversight and regulation. But I think maybe at this stage, if you have anybody in the audience who's got opposing views, it's the best time to just jump in and see how we can make this conversation and educate each other.
Can you hear me? This is a very good time for us to hear from the regulator. You bring both wonderful and very relevant perspective to the discourse, because really, everything is correct, Kombe is correct. But I know one thing that seems to be playing out, that if you're not tech savvy, you don't venture. And don't put in, and then one thing we agreed on is that don't put in your pension. And that is one thing you have learned. Don't put in your pension into this space, But we now have a regulator here who is going to speak to us from CBN. Mr. Jimo, thank you so much for joining us. Mr. Jimo Musa is the Director, Payment System Management Department and member of the CBN CBDC Technical Committee. What more could we want to speak to us? Who more? There is no other expert that can speak to us on, of course, what the government is thinking in regulating this space. So we'll give attention now to Mr. Jimo Musa to make his presentation and tell us what the regulator's perspective is on all we are talking about. Good morning, Mr. Jimo Musa.
I heard some of it, but frankly, it was hard to process a lot of it just from the technology.
Okay. So, but from what I said now, we can see that some of the research that they have done have actually given us and made us to lean more towards what you spoke about earlier, about how to go away from policing and move towards a enabling role, even in this area. And we're going to be taking some questions. And I know we have some questions that have to do with your own presentations earlier. So as I read out the questions, I know there was one that Ikane mentioned. Okay, this person directed his or her question to you. He said, is it not possible to regulate virtual assets peer-to-peer for tax reasons? Is it not possible to regulate virtual assets P2P for tax reasons? Did you hear that?
I think so, and some of it may be Abeli or the mask, just muffling the sound. But is it? I think the question was: is it possible to regulate or should be regulated for tax purposes.
Yes, it's possible to regulate virtual asset that is peer-to-peer for tax.
I mean, yeah, of course, you can do that. It's why we have, or why we tax lots of widgets that are out there. The concern, or where I'm driving from a policy perspective, is cryptocurrencies have generated value. We don't typically tax the dollar, right? You tax some other thing, and you do it in a way where, you know, it's the currency or the dollar that is driving the economy. If you want to tax, then tax the business concept or idea of the person who's doing the interface between an individual and their effort to invest in a cryptocurrency or blockchain technology. It's not, you're not taxing, how do I do this? This is one of the great issues with virtual assets. There's nothing, Bitcoin isn't worth anything. It doesn't have any intrinsic value beyond the blockchain concept. If you go back to 2008, when blockchain was, so you can trade in Bitcoin these days, but the way that we're assigning value to Bitcoin is in the Naira or in the US dollar or in how it can be converted. If all you wanted was a Bitcoin, you can't do anything with it. It's really the technology, the blockchain technology that undergirds it that has value. And now what we have in this ecosystem is lots of other people taking that concept, the blockchain tech concept, and applying it in all kinds of creative and interesting ways. Ethereum in the form of smart contracts is the example that I use. And that's what makes it so yeah, sure, if you want to tax this industry, okay, but you're still going to want to apply your tax to the transaction, the people who are actually trading something, and you could certainly tax an investment scheme. But what I'm concerned about is, or what I think is an interesting policy question, is trying to tax or regulate or police the ingenuity that comes with somebody making something useful out of the blockchain idea. It's very interesting. Whoever created Bitcoin, Satoshi or whoever you want to assign it to, they have made no money off of this. You take an Elon Musk or some of the other people that we talk about, they've all, what they created in the modern environment is now worth trillions and trillions of dollars, and they've held on to it jealously. Well, this is a different thing. It's a different open code, open source idea that really all of us have to develop into something. And it really hasn't crystallized that way yet. I think there's lots of opportunities, but it's still so new and in a lot of ways so novel that we're not there yet. It hasn't taken over government economies. And maybe it should, maybe it shouldn't. But things like the e-Naira are ways to blunt the blockchain opportunity. Bitcoin is something that's just archaic at this point. When you think about Web 3.0 and quantum computing and how all these things are really going to come to be and change your everyday life. So yeah, you can tax it. But the key isn't to taxing the exchanges, the peer-to-peer exchanges. I think the key is to attracting smart people who can use blockchain, create a thing with the blockchain, whatever that is, and taxing that product. Because if you could tax, Facebook and the transactions on Facebook, which in a great degree we do, that's where the taxing income is is very valuable. Kombe, do you? I mean, it may be too theoretical, but
Thank you. Thank you. Mr. Kombe, you want to say something to the issue of taxing?
Well, not really. I didn't get the question clearly, but I think it's an issue of what taxing crypto transactions.
Exactly. The person asked exactly, is it not possible to regulate virtual assets, peer-to-peer, for tax reasons? For tax reasons, so that I'm going to tax them.
Okay, I see. So my take is that because remember, and I think I'll ride on David's sentiments in terms of intrinsic value. Your cryptocurrency is not legal tender. So mostly, how does it come into being? If it's Bitcoin, you're going to do your mining, right? Once you do your mining, you get your your 6.25 Bitcoin for every transaction, and then you keep it in your wallet. But if you look at the monetary system, that kind of value is not backed by a central bank. So if you have to use that Bitcoin now to buy a thing of value, let's say, for instance, Elon Musk is selling Tesla vehicles and you have to pay it in Bitcoin. Yes, you can pay it in that Bitcoin and then, have it as a thing. I think that's where the tax applies. But if it's in the monetary system, you mine the Bitcoin. It wasn't issued by a monetary authority, and then you go to a jurisdiction where you can make a payment. You can make a payment in Bitcoin. Once you make that payment, if you're buying goods and services and you bring it in a jurisdiction where your cryptocurrencies are not legal tender, then you sell using that fiat currency. That somewhat destabilizes the money supply of that jurisdiction. And I think for regulators, those are the main issues, because right there will be destabilizing of the monetary system. It will affect your interest rates and ultimately bring in inflation, because in the first place, that value that was created for mining was not issued by a regulatory authority. But in terms of taxing, my take there is, obviously, if you're transacting peer-to-peer, it's still crypto. It's still not backed by legal tender. So if you have to tax, where exactly is the taxing coming from? And I think that's where David's points comes in. If now you go back to the underlying technology and create value out of there and create something that you can now merchandise and sell, then probably that product can be taxed. So it's still a gray area, and that's why you find that it's anonymous and it's very difficult to apply a formal taxation there. I think that's my take, my submission.
Thank you very much. So it is when it gets to the stage of creating something that can be sold, then of course the issue of tax may come in. So, but there are a lot of questions here we have for the EFCC, and I know they are quite able and prepared for them. So I will take them three at a point and see how we finish. And if any of the facilitators want to weigh in on any of the questions, you can also please indicate. The first question, I will take 3 at a time. I must commend the EFCC for their remarkable feats. My question deals with their collaboration with key stakeholders, Binance, Paxful, etc. The speaker said that they obtain KYC in certain instances. How does the Commission balance this with data privacy issues? Another question, from your statistics, the crimes are increasing. What do you think is responsible for this? I think this was also addressed at the time during his presentation. We have gone online since COVID, and of course, once you have more people in a particular area, of course, the criminals also migrate to that area. Everybody is looking for where there is meat. And if the meat has moved online, all of us will move online. And another question says, in an increasing world of digital space, some Nigerian youth are the core of digital innovations and related crimes also. We have often heard of enforcement of existing laws leading to arrest, prosecution, and persecutions. So, prosecution and persecution. What other ways can the EFCC engage youth in collaborative sessions towards educating and promoting ethical behaviors, particularly in our tertiary institutions? So I will take another question so that I will reduce what is on my hand. The other question says, with the birth of e-Naira, what are your expectations from a cyber crime point of view? With the birth of e-Naira, what are your expectations? Are there proactive measures being put in place by EFCC to mitigate possible e-Naira fraud? So we'll take this one before we go to the next slide. Please, you may go ahead. If you have to come to the middle, I don't know whether the microphone is loud enough where you are. Okay, they say you can speak from there.
Okay, hear me.
But the face is not showing.
Yeah, because the room
Maybe you should
wide. Left and flat.
Okay.
Come over there.
Please come so that you can see well. Because of the online. So you can stay in the middle.
Okay, yeah. So in terms of our engagement with the stakeholders of the cryptocurrency exchanges, the ones for which we have established our handshake with for now, I think the question was, what do we do with the data in relation to privacy, data privacy? So of course, yes. I think globally, if we're going by international best practices, using the GDPR as a yardstick, there's a common exception that as long as there's probable cause that is predicated on law enforcement action, custodians of data are bound to make it available. And for us, what is most important is probable cause. So once there is enough ground for us to believe that the information that we're requesting is material to our process, to our investigation, then we will go by the books to make those requests. And of course, we know that any information that we're handling is classified at the time, and it will not be made public until it is subject to being declassified as the public information, of course, where it goes to the court if it gets to the point of prosecution. So I want to believe that, not just what I'm saying for a fact, that the information that we receive, within these processes, of course, kept, are protected and handled in a manner where it will not be abused. And it is only being requested because we have probable cause that is predicated on law enforcement action to make the request in the first place. So you can be rest assured those information remain, secured and private with us until such a time where, it becomes invariably public by virtue of the fact that it has finally gone to court. And of course, you know that anything that is in court, becomes public document. Everyone has access to requests for such information. In terms of ways the commission can engage youths, to discourage them from being involved in cybercrime and other vices, we have part of our core mandates, as enshrined in the Establishment Act, is to engage in very rigorous public enlightenment campaigns, which is one of our mandate and the strategies we're really employing this period through our public admin department. We are constantly working with non-governmental organizations, civil rights organizations, educational bodies, religious bodies, through several mediums of engagement, where one of the key focuses is on youth reorientation. And this cuts across pupils from the primary school to the tertiary institutions, and of course the young school leavers as well. And from time to time, in conjunction with the stakeholders, programs and events are put together that bring these youths together, and where these several reorientation activities are carried out. It is said that if you must change a man, first of all, you have to change the way he thinks, and that is one of the strong things we believe in, and we are constantly engaging with various stakeholders to see that we achieve this. And the last question, I believe, is regards to our expectation on e-Naira. Well, going by, the existing steps that has already been taken with the regulators, the financial institutions, in the fight against money laundering and corruption, as it is, we want to believe the same will apply, because we're talking about the same stakeholders. The only thing that has changed is the introduction of a new legal tender, but all the stakeholders are still present. So we still have the apex regulator as the primary body that is championing this currency, and we want to believe that at some point we're going to be having the financial institutions play a role either as exchangers, as an exchange for which this virtual currency will at some point be converted to fiat naira, or at some other level. So we know that definitely there will be this integration at some point, there will be these connections made. So the measures that are already put in place for reporting of suspicious transactions, for the mandatory reports of, or the obligation for financial institutions to make available information based on our requests, we want to believe will still be there, because it is essentially the same thing. This is just a new legal tender. And what that means is that the same way the traditional currency can be used as a tool of crime, that's the same way the e-Naira can as well be used as a tool of crime. It can be a proceed of crime only if the investigation, is able to prove that it is what that represents. So in terms of expectation, we will want to still maintain the same approach of coordination and collaboration with the apex regulator and the financial institution in the sharing and exchange of information, both on legal grounds, and of course maintain a proper working relationship, so that when the need arises, we'll be able to exchange information in real time to help investigation. I think it is always better to be forward thinking and to put your proactive foot forward rather than to be reactive to wait till something goes wrong. And that is why during my presentation, I pointed out that, we're hoping that this will not end here, but we'll continue with all stakeholders that are involved in, this innovation, to constantly, engage, on different aspects that might be exploited, or that are likely to be exploited by bad actors in the future, just as a proactive measure. So in terms of expectations, I think we are ready, and we are keeping an open mind and an open arm to always engage with all stakeholders to better police the ecosystem.
Maybe I should take this last questions so that you can. Okay, this person is asking, I don't know whether you're able to answer this, but let me see ask the question. It says, how were you able to engage the crypto exchanges in view of the fact that there is no legal framework to that effect? This other person is asking, how does one identify criminal Bitcoin addresses? This will help everybody.
Okay, let me start from the first one. Well, through various law enforcement actions, especially as regards investigation of cases involving cryptocurrencies, over time we found out that more people, at this point I'm not saying bad actors, but we have more people using Binance and Paxful for both legitimate and other reasons. And of course, there is a country presence for these exchanges already in Nigeria. Now, they were not forced or obliged by law or whatever to come into this handshake, into this engagement with us, but they saw it as an opportunity to sort of execute the social corporate responsibility, because our jurisdiction represents one of the highest traffic within their services. And for them to successfully enjoy this patronage, it is only wise that they get into these alliances with us, even for their own benefit. At least at this point in time, they have some kind of avenue through which they can also make reports to us where they see some anomaly within their own system that concerns, that has direct nexus with any subject or actor within our own jurisdiction. So it is a kind of symbiotic relationship that works for everybody. And I think it was only logical for us to have struck this alliance at the time, and it is paying off very good dividends. And it is something that we're looking to expand as we look to seek more alliances, within this nature, to increase the capacity of how far we could go in making inquiries during investigations of this matter. I think what's the last one again?
The last one is how do you identify criminal Bitcoin addresses?
Okay, okay, naturally speaking, the exchanges have a database of addresses that have been flagged as suspicious because of their dealings on the exchange. That is, wallets that have been seen or deemed to have been engaged in illicit activity, suspicious transactions over a period of time are going to be flagged, and they maintain a record of this. On our own end, we will not readily see this, but through investigation, we will stumble on wallets that were used to receive proceeds of different types of crime. So what we do is we're beginning to build a repository for this information. So we're also building our own database of wallets that are involved, that are indeed involved in cybercrime and other forms of legal infractions that we're empowered to enforce with extant laws. So we have these databases. So, but if we come across, wallets that we suspect might be involved, in one form of crime or the other, and we're able to identify the wallet as belonging to any exchange that we have, this relationship with, we always go ahead to make further inquiries if that wallet features among, the database of blacklisted or flagged wallets that they have within their database. Other than that, we might not be able to just tell, men looking at the wallets on paper value to say, oh, this is a fraudulent wallet, without having to make reference to either our own database that we're currently populating or databases that already exist within these other exchanges.
Yes, that is all the questions. Help us answer. I believe Mr. Kombe, this goes to you. Somebody is asking a question with respect to private key. Is it possible? Is it by any means possible to retrieve a key to the blockchain wallet? Is it possible to retrieve it? Another person also asked on the same issue of private key. He said he wants a better explanation of what the private key is. The 12 words one is given at the opening of a trust wallet, are they the same? Are they the same with the private key? With 12 words one is given at the opening of a trust wallet. If not, at what point is the private key given? Did you get that?
I think I did, yeah. I think I did. So in terms of the private key, well, it depends on which platform you're using to get a digital wallet. But once you onboard and you're issued with a private key is just a hexadecimal string of numbers, usually 12 to 14 characters. Once you get issued with that private key, there's also, like a passphrase. It's the one you use to retrieve it if you forget it. Usually, it's just a string of letters or numbers. And I think, like any other platform, maybe if you're requesting for, maybe let's bring it to what's commonly known, even just a Google account, you probably need a passphrase to use it to remember. So your private key is private and is exactly the same way it is. Yeah, it's showing it. So that's a string of characters. It's a hexadecimal, and then the master password is what you use to retrieve it. So once you have that secret key, that key is what is the private key. But ultimately, that private key is what is associated to the wallet. And if you know that private key, then you have access to that wallet. And like I said earlier, the private key, whoever owns that private key owns the crypto in that wallet. And mostly, even in terms of investigations, if there's a crime scene and there's suspicion that maybe cryptocurrency was used in transaction, that's why it's advisable if there's a warrant and officers get on the scene, they have to seize any electronic devices which can store that private key. And once you get to that private key, then that's when you can have safe custody of those crypto assets that are associated to that primary key. Maybe just David can add. Thank you.
No, that's right, and they come in lots of different flavors depending on which either software or provider you're utilizing to create a wallet. And inside of your wallet, you can have several different access to several different cryptocurrencies, which will have different keys. So they're hard to track. They're easy to forget. They're easy to lose. They're produced randomly once, and once they're given to you, that's it. Which is why there are lots of people who got into Bitcoin early who have since lost their key, and you can't recover it. What you can do on the blockchain is go back and determine if you know the amount or if you know some information about date or time. You can go back and identify that here's the transaction that occurred where a certain Bitcoin amount was suspended on the blockchain because it was attached to this wallet, but you can't actually get to it because you can never prove that you're the individual who purchased that Bitcoin because you don't have the key that unlocks it. And theoretically, I mean, years, decades down the road, you could potentially audit the blockchain, at least the Bitcoin blockchain, identify all those lost pieces of value and bring them back online potentially. But again, how you do that is unknown. There's no rules for it. And right now, that value, whatever that value is lost forever if you don't have the code, don't have the key. But that's coming. I mean, there are going to be court cases eventually where somebody knows the time they bought it, the amount they bought it. They'll be able to show a lot of indices of truth, but they won't have the pass key. And whether or not that coin, which is out there, is ever going to be recovered is an interesting, not only legal but theoretical question when it comes to the blockchain.
Thank you. You know, with this question, I will go to another issue I noted when Mr. Kombe, you were making your presentation, when you were describing the traditional defense in depth. In your analysis, that's still sufficient to deal with all these security issues. Is the traditional defense that you described, is it still effective in dealing with what we have now?
Well, the basic principles, yeah, are still effective because the traditional methods of security is layered security. So you want a security methodology where even when you're getting an attack, the attacker doesn't get to your resources quickly. So they'll probably have to go through 4 or 5 headers. That way you find that even the resources dedicated to that attack might be diverted. If they can find an easier target, a target that has probably just one barrier of security and they can breach it, then they'll settle for that. So the security and the defense in depth, just helps deter those attacks to look for easier prey. So the order is, whoever has the least amount of security is the greatest target. If I have 4 or 5 layers of security, chances are that it will take a long time for an attacker to get to me. So that's where the principles apply. Remember, there was a paradigm of an old castle in a kingdom somewhere where they had, the main gate and they had somebody in the bush looking out for criminals coming. So those layers would deter the enemy. But if they can find a target that is easier to attack, a target that doesn't have multi-layers of authentication, 2-factor authentication, a target that doesn't have a firewall, a target that doesn't have any analytics to view, those are the targets that will be hit first. So the more layers of security you have, chances are that it will take longer for an attacker to get to you, and that in itself gives you the much needed protection. Thank you.
Thank you. I would like Professor David to please comment on this. This was one of the things that Professor Ajayi also mentioned when he spoke. He dwelt extensively on it, that one of the things that the regulators, I know this resonates with what you said during your own presentation about the role that the regulators should play not to truly go and ban cryptocurrency. He mentioned during his presentation that the emphasis should be on risk-based approach rather than compliance. Risk-based approach of the regulator should have a risk-based approach to cryptocurrency rather than compliance. So what can you comment on that based on the position you also took when you made your presentation?
Sure. And again, there are delineations within each of these categories that are important. When I'm talking about risk-based approaches, I'm largely assuming we're talking about investment in cryptocurrencies or in blockchain technologies, as opposed to the peer-to-peer exchange of a small amount of value. Those things, by definition of the blockchain being transparent, immutable, and understood, accessible, they should be very riskless. When you're talking about investment, then you should assume, all of the entrants should assume, anything here is highly risky and volatile. And the reasons for its risk are lots, because you don't understand it, because you don't know who you're dealing with. But so look, to comments, look, the reason so much of this is such a challenge is up until recently, value has been something ultimately physical, right? I have this dollar bill. How I defeat somebody is because I physically own it and it's in my pocket or my house or a safe or wherever. We're no longer with gold, where gold backs these things up. It's literally the value of the sovereign, the United States government. This no longer exists for any cryptocurrency. The only thing that exists when you're talking about a cryptocurrency of any kind, Bitcoin, it doesn't, Dogecoin, doesn't matter, is a very long list of ones and zeros that can't be understood either without the right program, the right software, and as we've talked about, a key. That's spooky. And because that's new and because that's scary, the value of those ones and zeros is purely defined by how much we all assign to it. That makes it volatile. There's nothing tangible. I can't take it and trade it. Even a shell, if you go back to, I think it was one of Kombe's slides that showed the progression of money. You start way back in thousands and thousands of years ago, where people assigned value to a shell. Well, okay, you still had a shell. The shell could be worth $1 million or $1, but you had something that you could tangibly hold. When we convert our currency and convert our value to something that the entire globe gets to value, and you can't see it or hold it or hide it or lock it up, or improve it in any real way, then what you're dealing with is something that people can decide tomorrow is worthless. And it creates the opportunity, which is where in this era that we're at today, where people who want to play games and take advantage, they can, and they can to a great extent. There's just nothing that's that you can really sink your teeth into as an investor. It is just highly prospective. So, yeah, I think a risk-based approach to these things is the right way, and everybody should view every cryptocurrency with a great deal of suspicion. And again, I'm not sure I understood the comparison to a compliance approach, but this is exceedingly risky until we play this out for several more years, and you get some of these currencies that become established. You do get governments or other large investment schemes stepping in and putting real value behind it or associated with it. And there are legal systems by which people who abuse that, there are ways to recover a loss, at least an illicit loss. And none of that has developed with any confidence, even though it's been around for 10, 12, 15 years.
Thank you very much, David. And Professor Lorena, I want to make a further statement on that.
I think very true. The issue really is when you're talking about transaction, about services and products, about exchanges. So this would only be useful when you have them within the regulatory net, and the registered transactions are taking place. I think that is at that point, and then other crypto assets as well. So we're not merely talking about crypto.
Okay, thank you very much. And you know, during the Professor Alliance-AGA's this thing, he talked about the culture that needs to change. I believe the issue we have with it's just like a lawyer asked the question. In fact, I want to believe that it was a lawyer that asked that question. Now, what was your basis for engaging? There is no legal backing for you to engage with crypto exchanges. In fact, I would want to believe that that is how the mind of a lawyer will work. You know, just the same question that they said that the e-naira does not have any basis, right? But of course, you can see from Mr. Jimo's explanation that the CBN Act actually envisages that money can be in a design and form as approved. That if it's approved, there is no need for it to go to the National Assembly for it to be legislated upon again. Of course, they can go ahead and roll it out because it is within their prerogative to decide what type of money that we use, because the broad framework for money has already been provided for under the Act. So you can imagine what would happen if they kept their hands together and said, no, we're waiting for National Assembly to pass the law for us to have the e-naira. We may still be at this spot for another 5 years before we get to that stage where we have a law that enables us. But when we have regulatory agencies that are proactive and are willing to work, think outside the box, and not only look at law reforms, there are things we can do while we wait for the legislator to do their work. There are still things that can be done within the purview of what we have available to ensure that we don't just fold our hands and are waiting for laws to be passed. Before we go to the concluding statement, I would want us to fill out the forms that have been given to us, the feedback form. That feedback form is very important. It makes it, it makes it possible for us to improve on our programs. When you fill that form and give it back, it gives us that feedback we require to ensure that the next program you are going to attend, organized by AGA Africa and possibly LBS, is going to be a better program. So please fill up the feedback form and send it across to us. Thank you very much. And I also want to announce that the officers from EFCC, please don't be in a hurry to go. The administrator will want to see you once we conclude quickly. The officers that came from outside the states, once we conclude quickly. So please don't be in a hurry to go. Once we finish, please, the administrator, Mrs. Philo, wants to see you briefly just before you go. And that will bring us to the end. We are at 4:35 already, so we want to have the final statements from our wonderful facilitators. So we'll start with Professor David Blake. Please, can you give us your concluding statement on what has happened and all the presentations that we have?
Oh, I can pretty easily wrap and say thanks for the opportunity to speak, and thank you for sitting through it. I think the discussion was good and at a higher level that a lot of these discussions are occurring in other places. So good for you all, and I think it's the e-naira's exciting opportunity, and I look forward to hearing and seeing how it plays out, and hopefully I can be there in person next time, and look forward to meeting you all and working with you all. And if there's anything we can ever do, I hope you will call on us and reach out. So interesting stuff, cryptocurrency. It's fascinating. I do think it's here to stay, and it's only going to improve. A lot of the concerns about it from a money laundering and privacy and cybersecurity perspective, I think a lot of those things will be cabin controlled and understood as more and more people engage in this dialogue and begin to not be scared of it. But the real value is in the blockchain and creative people coming up with new things in the blockchain, and much less in the value of the Bitcoin on the DEX tomorrow. So thank you very much, and God bless everyone.
Thank you, thank you, thank you, thank you. Please a round of applause for David. David is the General Counsel AGA Africa. You know, he has been the one helping us, bringing speakers, and ensuring that we have wonderful programs. And we look forward to hosting you in Nigeria, baby. I look forward to taking you to eat mekepe soup and to eat jollof rice so that I can convince you that Nigerian jollof rice is the best. You know, so we look forward to hosting you one of these days in Nigeria. Thank you so much. Mr. Kombe, please can you give us your concluding statement?
Thank you very much. So I think just to thank AGA Africa and Lagos Business School for bringing up such platforms. I think like our prof mentioned, such platforms are important. We have to deliberate on these things, and it's good that most of these technologies now are being rolled out. But I think from the deliberations we've seen, everybody is talking about standardizations and ultimately how to interoperate all these platforms, because ultimately, you know, these central bank digital currencies, the e-naira, won't be national assets if it has to move value across the globe. You know, it has to interoperate, it has to interface with other platforms, and that's where international standards come in handy, and standardization and just making sure, you know, these platforms are compatible with some of these international guidelines, FATF recommendations, ITU recommendations, and all the other global standards. But ultimately, you know, we know the underlying technologies are great. Blockchain, no doubt, can be applied not just for financial services. We've discovered that, you know, you can apply it for national identity, you can apply it for land titling, and a whole lot of amazing things. So it's up to innovators. And I think for regulators, the issue should be, you know, you allow that innovation to thrive and be mindful of all the risks. That's where the risk-based regulation comes in. But ultimately harness all these advantages of these platforms and technologies, bring them to the fore, and then build solutions that help humanity, solutions that help reduce friction, and solutions that help, you know, this world is a better place to live in. Thank you very much, and God bless you all. Thank you.
Thank you. Thank you. With us from yesterday to today, and I can tell you he was all active from yesterday to today. So it takes a lot of effort and sacrifice for him to be here and to participate in all the sessions. Thank you so much, Mr. Kombe. I will also look forward to hosting you in Nigeria so that you would be here physically and enjoy our rich culture. And we know that this is not the last time we're going to have you at our event. Thank you so much. We'll also invite Mr. Dane for his closing remark. A round of applause for him.
It's been really an honor being here with colleagues. I really want the heart to know that there's such alliances, you know, present for us to leverage on. And I only hope that the deliberations that we have here will, you know, invariably result, you know, successes and in charting the course for us to, you know, better handle issues in this regard in the future as the days come by. So thank you once again, and I look forward, you know, to collaborating with everyone that's, you know, we've met here today. Yeah, for more ways. Thank you very much.
You're not inviting him. You're not inviting him.
You're not inviting
You're inviting him.
We don't need to invite him. He's the son of the soil, and he's on the soil. So he's a landlord already. So we go with him. Thank you so much. Thank you so much, Mr. Dane, for being here with us for these past 2 days and contributing to all we are doing. And we look forward to more in-depth collaboration with EFCC on other issues, aspects for future on money laundering, all those issues. We are going to, of course, be sending the proposal to your office for our next year event, and we hope that we're able to arrange quickly what we're doing for next year and close out on that before the year ends. Thank you, thank you, thank you, thank you so much. Of course, our landlord. With a round of applause, let us welcome.
Thank you very much, of course, to all of you for honoring the invitation and for being so, how do I call it now, good guests over the past 2 days. I think it's important to also mention that there's an aspect of regulation that we don't do so well in Nigeria, which is that of education in terms of letting people know what is happening. In financial space, we'll be talking more about financial literacy, financial education, but also we're really talking about letting the general public know more and better details about technology, innovation. I think that's something that we concentrate on as regulators with other stakeholders, of course. The other point that I think is also worth mentioning is that regulators really have no business showing allegiance to individuals rather than to the constitution of the country. I think the United States military gets it right. Their allegiance is to the constitution, it's not to an individual. So regulators should concentrate on enforcing regulation. And it really is not the business of regulators to go to break their own regulation or to break the law in terms of dealing with political issues or in terms of dealing with people who may not necessarily agree with government or agree with the main actors on merely political issues. I think that is really very important so that regulators can show credibility